Welcome back. This is a market where we have a lot of primary issuances, and today the IPO that opens is Credo Brands. You would have known it better as the brand at which it sells its apparel, which is Mufti itself. So near 550 crore IPO opens today, and it's an entire offer for sale seeking a market cap of close to 1800 crores. We have with us Mr. Khushlani as well as Mr. Mittal, who are the MD, CEOs and CFOs of the company. Thanks a lot, gentlemen, for joining in. I'm sure from Nigel and me, both of us, sometime in our college days, etc., would have done that rite of passage through Mufti stores, and then we moved on to other brands as well.
On a special day, maybe.
On a special day, perhaps. But let's talk about business itself. There is a bunch of people who are looking at this fashion, casual fashion sort of avatar of this business. You do revenues of just about 500 odd crores. The market is a lot larger than that. What's the revenue potential, growth potential for you going from here, given that you are a 25-year-old brand?
So, two things. When we look at the revenue as per the way you book it, it's it doesn't truly reflect the positioning and the coverage of the brand or the share of the brand in the market, because it's different on how you book your revenues. As per the industry report, if you see that there's USPA, which has a market share of 3.81 odd percent, Levi's, which has a market share of 1.72 odd percent, and us, we stand at 1.28%, shade below Levi's. However, in the 3.81% and 1.72% of Levi's and USPA being prior to that, is that it includes, in the industry report, it includes everything except innerwear. It includes all categories such as women's wear, kids wear, footwear and other categories they may be into. So from that, we have to judge as to where we are as far as menswear is concerned. We are one of the prominent players in the market, and we intend to, do what we do profitably. We've calibrated the growth of this brand and the company through the profitability lens always, and we have done that consistently, and that's what we intend to do going forward as well.
Okay, all right. Hi, gentlemen, and thanks so much for coming down to our studio. Maybe make it look a little bit more fashionable for today, at least. Give us a couple of details then. In terms of the growth of the market that you're targeting, what is the growth, and are you outpacing that growth? I want to understand whether you can take a larger chunk, in terms of that market share, point number one. And point number two, since we're talking about revenues itself, how much of your money is coming from the e-commerce, segment, and where do you think that stabilizes that?
So, two things, Nigel. First, when we talk about growth, see, the industry is slated to grow as per the industry report roughly 2.5 times in the next 5 years to come.
Got it.
Out of that, the organized market is expected to grow at a larger pace. Out of that, the men's branded segment is expected to grow at an even larger pace. And out of that, casual wear is supposed to take an even larger share of what it already has today. So we sit there right in that sweet spot in that sense. So we hope to get as much as we can.
So what is the growth rate of that casual segment?
So that is 21 odd percent for the entire market, and for men's branded segment is likely to be 28.9%.
So you will obviously...
You will outgrow that.
Well, I cannot really put those kind of numbers, but just to give you an example.
What do you target? We're not asking you to put a number to it, but you target to...
Sure, I will just say that.
Yeah.
So, like last year, we opened 52 new stores. Okay. And this year, in the first 6 months, we've opened 31 new stores already. Right. And they're on the trot. So this is something we've been consistently doing. Along with this, I mean, today, as on September, we had 404, as on 30th September, 404 exclusive brand outlets.
Okay.
So you could reduce the 31 from that and reduce the 52 from that last year, and then put some kind of number on that. And there's a healthy rate of growth that we have been seeing across same stores that we have and same points of sale that we have. And that is what we intend to continue doing even going forward.
So let's ask you this in another way then. How many stores do you plan to open, say, in the next 12, 18, 24 months? So we can back calculate the revenue potential of the company.
We certainly intend to continue opening it at the same rate at which we have been doing.
Which is at least 50 stores per year.
We should be able to maintain that.
And you all were getting to the next part of it about e-commerce. What is it? Where does it stabilize at?
E-commerce, yes, sorry, I missed that earlier. See, e-commerce we use as a channel to liquidate our old season merchandise. As on date, the consumer in India is lured to e-commerce purely because of discounts. And as a brand, we have been very, very conscious about maintaining the value of the brand and giving the consumer exactly what we promise him. So we have the same kind of merchandise, whether it's available at my EBO, whether it's my large format shop, or whether it's my MBO, or whichever store. If there's a Mufti product available, or even the online, it's the same product available, and at that same point of time, the same product will always be available to them at the same price. So we've used that channel to liquidate our old season merchandise. It's very important in the fashion business to be able to liquidate everything you have produced profitably, and that's something what is something what we have been doing historically, and we intend to continue doing that. Whatever we produce, we're able to liquidate that without making any losses. And on account of inventory, we can say that there have been no material write-offs in the history of the company.
As a percentage, it's what, 5%, 4%, 3%? What is it?
So FY23 was around 5% of the total revenue, and it ranges around 5 to 10% historically.
So you expect it to remain in that vicinity of 5 to 10%. Got it.
Yeah, sure.
Also, if you could tell us, branding, what's your advertising as well as promotion cost as a percentage of your sales, and where does it stabilize at?
So typically it's 3.5 to 5% of revenue, which is what it has historically been, and we intend to keep it in that range.
What about margins? Since you're spending in branding, etc., all of that has been pretty similar. At the same time, you've been adding stores, etc. What explains this jump that we've seen in your margins from, as low as sub 20% to around 33% that you posted in FY23? And the question is, how much of this is sustainable? Because we've seen company post incredible numbers just before they come to the IPO, especially if it's an OFS.
Lovely. So, see, there are, as it's mentioned even in our RHP, there are some big changes that we went through as a brand. We've had very humble beginnings. We started off as a brand from a single man operation to whatever we are today. And during that journey, we've learned a lot of things, and there are a lot of changes that we made within the brand just before COVID, in terms of our brand identity, in terms of our merchandise architecture, in terms of our retail identity, and all of that put together, along with a lot of operational efficiencies that were brought into the business during COVID, because COVID gave everyone an opportunity to, course correct themselves and look under every corner and nook and corner of the carpet and clean every speck of dust you could. So all of that put together, and operational efficiencies that we made and some structural changes that we made in the business have led to this. 2 or 3 major changes like manpower costs, then there are some costs on account of...
Short point, this is sustainable,
yes,
upwards of 30%.
We should certainly be able to keep these margins. This was a normal year, the first year after COVID, and all of what we did has begun to bear fruits, and we should be able to...
Final question from my end then, largely because, in an era where brand mortality is so high, you've been around for 25 years, and your positioning has been pretty spick and span in that positioning parameter itself. There are a lot of large players coming in this casual fashion space, etc. What if someone writes a check to you? I mean, will Mufti be up for sale?
Has someone written a check in the past? Before you all came to do an IPO and raise some money from the market, have you all been offered? Let me buy you the check, sir. I think your business is doing well and I want to buy you out. Have you been offered that?
There was a time when there was somebody who did approach us for that. But however, this is the only business that I've done, and this brand is a labor of my love and passion. And this is what I started when I was a young boy, and I've come to where we are. And it's run by me and my family, and of course the rest of my colleagues. And the whole business has been built on relationships from the front end to within the company to the back end. And we're all one happy family moving together. Everyone's grown together.
Okay.
So we intend to, continue doing that.
Well, we wish you all the well, sir. And in fact, I'm sure you put in a lot of hard work into this business. We thank you for joining in and educating us about this business. On listing, we request you to join us back. We'll try to squeeze a couple of numbers out of you, margin trajectory, as well as the path with the 3-year time horizon. Thanks for coming down.
Thank you, Aranias.
Thank you.
Well, time to slip into a short break, guys. We'll come back and we'll continue our focus on markets and on stock-specific action. Don't go anywhere.